There's been some turmoil in the crypto market, but I'm bullish. I'm going to explain why. And I'll also tell you, you know why it went down last week? You know, we hoped in crypto was kind of a thought of, and maybe it used to be the case, that cryptocurrencies were an uncorrelated asset. Guess what? They're not. Last week in the repo markets, banks were short for cash. And you know what that means? Banks are nervous, risk off. Everything went down. Crypto goes right with it. But the good news, or depending on how you look at it, is central banks, since January they capitulated, they're all easing credit. They're all trying to put risk back on. So when the banks had trouble, they didn't have enough cash, without discussion, without a second thought, the Fed injected like $300 billion into the banking system. Just like that. That's easy credit time. When it's easy credit, it's risk on, crypto's going higher. So there was turmoil, and people sort of freaked out and did a little risk off minute, but the Fed's got your back. Credit is easing. They're printing, if you want to use that term. So, to me, that's the main thing that keeps this bull running. Also, so I was at a crypto event last week, talked to a lot of really smart people. That's what's inspiring this video. One of the people I spoke to, Caitlin Long, she's brilliant. She just published an article in Forbes about this repo mess. And I was talking to her, and she's like, so the banks are short for cash. The Fed injects all this money. All's fine. By the first week of August, this problem is over, and it's back on. Risk is back on. Until the next crisis, and then the Fed has to print more money again. It's when the Fed is sort of thinking, oh, we're going to slow it. We're not going to be easing. That's when it starts to get dicey. But that's not the case right now. It all looks good there. Now, I also want to mention, before I get to the supply demand, I am bullish because supply and demand of crypto, Bitcoin and Ethereum, looks good. Before I talk about that, let me just briefly say my recommendations on portfolio, which is, first of all, look at your total net worth. 1 to 10% of it should be in crypto. Don't do more than 10% if you're starting. If you put money in a long time ago and it's grown more than 10% and you're confident, fine. But if you're putting money in, not more than 10% of your total net worth, not less than 1%. Less than 1%, you're not in the game. 1%, worst case scenario, goes to zero, you lost 1%. But if we're right, and if you're watching this video, you got a sense that maybe this is right. If it's right, that 1% becomes 10%, 20%. Has a big effect on your portfolio. So get off zero, right? Now, once you have money in crypto, 90% of that should be Bitcoin and Ethereum. If you want it to be all Bitcoin, fine. But I like 50-50. I'll get to why. I'm a little more optimistic on Ethereum than a lot of people. But in this bull run, Bitcoin, we'll get to this in a second. Anyways, Bitcoin and Ethereum, 90%. With the remaining 10% of your crypto portfolio, take 5 or 10 bets, 1 or 2% each, on some of these other tokens. And that's a topic for another video. Some of the exciting ones that if you're right, then that thing they go way up. And if you're wrong, those disappear. But let's get into the prices. At the end of the day, it's a supply-demand curve, and the supply situation looks great. With Bitcoin, the thing about Bitcoin is not only is it a fixed supply, Bitcoin wins the meme war. Bitcoin is so easy for people to understand, right? There will only be 21 million Bitcoin. There is a fixed supply. People can understand that. Also, the supply of Bitcoin, the amount of new Bitcoin gets mined or gets created every 10 minutes when a block is created. But the amount of Bitcoin that gets created every 10 minutes gets cut in half every 4 years. This is easy to understand, right? And next May, 2020, the halvening. I think this is going to be a media event that helps people understand fixed supply of Bitcoin, and that the supply, every 10 minutes, 12.5 Bitcoin is created to the miner who closed that block. Starting in May, it's going to be 6.25 Bitcoin is created every 10 minutes. People understand this, and it's clearly the supply is decreasing. And, this is next to central banks that are just creating new dollars on a moment's notice, right? Last week, you need 300 billion, here you go. No debates, no hearings in Congress. No one even talks about it. Just create it. So the supply story looks good. Now, and also Satoshi Nakamoto, the founder or whatever of Bitcoin doesn't exist. This helps people understand not only that it's decentralized, but this idea, because everybody naturally thinks, the supply is that until the founder decides he wants to print more. No, that's not how it works. And that's where it gets into the weeds of understanding how Bitcoin works as a decentralized currency. But when you understand that there's nobody running it at all, it's easier for people to understand that. So now with Ethereum's supply schedule is actually very similar to Bitcoin's. It's not so exact and baked into the chain that every 4 years gets cut in half. It's part of the upgrade schedule. Not all of it is baked in the code. But what is planned is a similar reduction in supply to what we see in Bitcoin, and it's happening. The community in Ethereum wants the token to have value and for the supply to go down. It's happening, but it's not as easy and believable for people to accept as it is with Bitcoin. Also, Vitalik Buterin is an amazing leader. He's a genius, but he doesn't own any, the network. He doesn't tell anybody what to do. And Ethereum, if they wanted to create some, let's print a bunch of Ethereum and give them to Vitalik Buterin, all the nodes would have to update with that code. They're not going to do it. So it is decentralized. It is as decentralized as Bitcoin, but it's harder for people to believe or accept at this point. And so, like I said, the supply on Ethereum, and Ethereum even has an advantage over Bitcoin. And again, it's a point that I think people are sort of missing at this point, which is use case, locking up. There's already this DeFi, decentralized finance, where people are taking their Ethereum tokens and locking them up as collateral in order to create derivatives, to create a dollar peg token, to locking them up in pools for trading. This is a use case that takes the Ethereum out of the supply by locking it up. And also, proof of stake is coming. So instead of with Bitcoin, the transactions are mined and they're rewarded with new Bitcoin. When Ethereum moves to proof of stake, instead of mining, you are securing the network by locking up your tokens. There may be 20 to 40% in the long run. What's the time schedule on this? That's a topic for another whole video. But eventually, 20 to 40% of all Ethereum may be locked up in the proof of stake system to secure the network. So instead of printing new ones to secure the network, people are locking them up. And again, this is something that not everyone understands. There also was a question on the time frame on all this. And also, I said 20 to 40% because I think that's, whatever. That's based on my understanding and guessing. But that's not exactly known either. And so this is why I think Ethereum is a little undervalued, because the points for Ethereum are as good, if not better, than on Bitcoin. But it's less understood. Bitcoin's easy to understand. And Bitcoin's still a great story. But let's talk about demand. Demand also looks great, right? And I think the reason demand is increasing in a sense is more on-ramps are being turned on, and those on-ramps I believe there are a number of investors who will only go through a particular on-ramp once it's turned on. So for example, Fidelity, turned on custody of Bitcoin almost a year ago. But what I just found out is they only allowed their customers to buy Bitcoin starting a few weeks ago. So now an example of this is I have a friend who's a smart guy investor. He likes to get into things early. We've talked about Bitcoin for years, and he's never bought any. Recently, he's like, I think it's time to get a little Bitcoin. And I told him about Coinbase. I don't want to go to Coinbase. Oh, he has a fund. He invests other people's money. He wants to put some in that. Coinbase, and I got to do this and that. And I don't understand all the details of why it's difficult. But he's like, Fidelity. He's sort of set up with them with his investment fund. And so when that ramp turns on, he's able to buy Bitcoin. Until that's turned on, he doesn't really have an easy way to buy it. Bakkt, New York Stock Exchange, a respected exchange, just turned on last week. There are customers or investors who want to get Bitcoin, but just don't have a way unless that is the one channel they will use. There's some talk that, Bakkt launched, and the first day it was like only 27 Bitcoin were traded or something. These things take some time to ramp. And I was talking to people at this event. They're like, well, on the first day, it's like this has to turn on, and then it has to be indexed, and then it goes to these other things, and it takes time. But the word I get from everybody is that there is demand, or I've heard the term strong demand, for people who've been waiting for their particular fiat ramp to get turned on. Now, one caveat on that is, if you talk to a salesperson, they always say, oh, yeah, our product's great, and everybody wants to buy it. And I'm not saying I was exactly talking to salespeople, but, there could be some bias. But it appears, I heard it consistently enough, and I've never heard anyone say, oh, nobody wants it. So, and that looks really good. Also, TD Ameritrade appears. Eventually, they too they're going to be selling multiple cryptocurrencies, and there are customers in TD Ameritrade who maybe already went off and also opened a Coinbase account, but there are several customers that they have that probably want to buy Bitcoin, but they're not going to do anything until it gets turned on in TD Ameritrade. And there's a lot of that happening. We've seen Binance.us just got turned on. And by the way, I talked about Binance. For your 10%, you want to make some bets. I've talked about Binance might be one. And you had to sell the BNB token if you live in the U.S. Well, now Binance.us is on, so now I guess we can get back into the BNB token if you wanted. That's a whole nother video. But anyways, these things are being turned on. And also, the regulators are approving things. It appears, a couple years ago when these institutions wanted to get approved and would talk to regulators, they had to explain what Bitcoin was. They had to explain what a public key was. Now the regulators understand this stuff, and they're making their approvals. Like, things are going through. Now, it's still a pain in the ass, and it's still slow, and I would always expect delays. Soon can mean a year. But things are happening. Things are moving, and regulators are like I said, they're slow and they're a pain in the ass, but they sort of get it, and eventually they give you the stamp of approval. So things are moving, and that increases demand, or if nothing else, the ability for those who already have the demand to buy. And also there's new demand in the locking up or the usage of these tokens. So first of all, on Ethereum, I talked about locking up assets for DeFi. You can go to defipulse.com, defipulse.com to see some of the most exciting apps, or dApps, whatever you want to call them, that are locking up Ethereum for these applications. There's a lot going on. But also, guess what? The number one, depending on how you measure it, but the number one using of gas application is on Ethereum. It's a pyramid scheme. And let me explain something, because I saw a lot of this in Twitter. There's Ponzi scheme and pyramid. And it doesn't matter if you use the word scheme or game. Ponzi versus pyramid. These are two different things, completely different. Ponzi is when, if I have a Ponzi, you give me money. I say, I have your money, and here's a statement showing all the money you have, but I actually take it and steal it. That's illegal. It's wrong. That's a Ponzi. A pyramid is sort of like a game. And if you have they call them provably fair pyramids, which you can do on Ethereum, where you set up some sort of scheme where you put money in, and if you refer someone and when they come in, you get a percentage of their money. If you refer enough people, then you get money. And if you hold, you get money. If you sell, then you lose some money. And it's a game based on all these rules. it's a money shuffle in which you can make money or lose money based on when you get in or out or whatever the rules are, right? So the bottom line is money, people put money in, and then some people get money out, and no money is stolen. It's just reshuffled. And that should not be illegal. And the reason is because you can actually create incentive systems that incent people to hold or to get involved or to refer others. It's attach a cool pyramid to a utility token and get people to hold it as well. It can help a real ecosystem develop. So if it's just a pure pyramid game, it's just gambling. And yeah, it's probably not the most smart thing for you to do. But it's not morally horrible. It's not like stealing in a Ponzi, right? But an intelligently done pyramid attached to a utility token could have great value. So I like pyramids, and it's the number one app right now, or at least gas usage on Ethereum, is this Chinese, it's called Fairwind. So anyways, things like that are happening. Also, development is speeding up. So because second layer applications are easier to make than the base layer application. So for example, just launching Ethereum, right? That took years. It was difficult. Then MakerDAO launches. That took years to launch. Then people lock up their Ethereum to create the DAI token. Then a whole economy starts developing around the DAI token. So you've got compound finance, which lets you lock up your DAI token and earn interest on it. It was easier to build compound than it was to build Maker. And then there's an application called InstaDApp, which makes it really easy for you to take your DAI and lock it up in compound and earn interest. And I was talking to someone, I was surprised because I was thinking, okay, this is a cool use case. I can earn interest on dollars. And I was like, well, I'll go to compound, right? I'll figure it out. I understand InstaDApp is easy, but I'm smart. I'm going to figure it out, and because that'll be cheaper. And he's explaining, no, actually using this InstaDApp will, it sort of is smart and will get you better rates. So it's easier to use this higher level application. But the bottom line is, as you move up the level like this, it gets easier to develop and easier to create new applications and new uses for crypto, including Bitcoin. Guess what? There's now a decentralized TBTC. I don't know that much about it, exactly when it's launching. But in the long run, and I'm sure anyways, you will have a trustless version of Bitcoin that can be locked into Ethereum. And then that Bitcoin collateral gets locked up in all these DeFi applications. So Bitcoin and Ethereum, they play with each other, and we can debate about which one's better. And I personally think Ethereum becomes bigger because there's more use cases and whatever. But they both help each other, and they're both playing together. So there's a lot of excitement happening. And another thing that is positive for Bitcoin for me, so Lightning Network, first of all, when it launched, it was January 2018, it launched, and it's like, okay, instant, free, private transactions on Bitcoin through Lightning Network. And it felt like it's like in a few months we're going to see an app. Well, here we are. It's like over a year later, and it still is like, where is it? I mean, it's there, but there's not that much going on. No one's using it. It's still difficult. And I started to get really negative on it. And also, look at Ethereum. When it comes to payment channels like Lightning Network, there's Plasma, and there's like 5 implementations of Plasma, like people are working on Ethereum. Plus, there's 5 other types of methods of doing instant transactions on Ethereum. So like this, something's going to work over there, right? On Bitcoin, all they have is Lightning. And what's happening? I'm like getting really negative. But I talked to some smart people, a guy who's a new developer at Square Crypto hired. And my feeling now is Lightning is going to work at some point. Lightning is going to work, but it's going to be in 2 to 3 years. So I'm a little more optimistic now that something eventually will be working, and there will be an easy system for instant secure transactions on Bitcoin using Bitcoin. But the time frame for it has been pushed out 2 to 3 years. I mean, it's a little scary for me. It's another reason why I like Ethereum better, but I'm actually more positive on Lightning now than I was before going to this event. Another thing I liked hearing that I thought was interesting is, there's this term, cryptocurrency is a new asset class. So, so in general, what an asset class, like real estate is an asset class, stocks are an asset class, bonds are an asset class. There's these different types of investments. And when it comes to diversifying your money, you like to be in different asset classes. And this idea that cryptocurrency is a new asset class it's sort of a new thought from a year or two ago, first time I heard it. And, I felt like an unaccepted concept, but I'm starting to hear it as just people just mentioning it like it's a given, and we have this new asset class, blah, blah, blah. Like there's no debate about it. It's a new asset class. If that's accepted as truth, that increases, I think, the allocation, because it's not like, oh, for those who invest in risky tech projects, that pool of money, some gets allocated to Bitcoin. No, there's a whole nother asset class. And so that sort of includes everybody who wants to diversify may include some. You understand? I think it's bullish hearing how that phrase is becoming accepted, that crypto is a new asset class. Finally, and I've talked about this before, I'm not a technical analyst. I don't believe in day trading or even trading in the real sense of the term of like this, in and out kind of thing. I think it's crazy. I think they don't make as much money as real long-term investors. But looking at the charts in the long run, with Bitcoin, especially, you've got 10 years, there is a pattern. Parabolic move up, 10x or more, followed by a crash of 80%-ish, and then a boring period. And each peak is an order of magnitude, 10x or more higher than the previous, and each boring period is an order of magnitude, 10x more than the previous boring period. And we've seen that 4 times in Bitcoin, and it appears that the 5th parabolic move